Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This technical analysis video is for Monday, August 19th through Friday, August 24th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right. Bottom line is the markets closed on Friday essentially almost to the penny of the 52-week high on the SPY. The 52-week high prior to Friday was 142.21. We closed at 142.18. You can clearly see the pivot high right here on the SPY, which mirrors the S&P 500, and this is the daily chart. And back on April 2nd, 2012, we hit this high. To Friday, you can clearly see the markets went right into that before kind of pausing and pulling back a little bit. They pierced it on the highs of the day. If we go to the intraday chart here, you can see again that last candle of the day flushing up and then pulling back in. Volume, again, this is very important. Volume has been ridiculously light the last 2 to 3 weeks. It is the lightest volume in the market on the SPY, probably in about 4 to 5 years, maybe even longer. I think you have to go back to about 2007 before things got crazy, before the market started to crash down on the real estate financial crisis, to find volume this light. And that's pretty important because, again, what it's showing us is that there's really just no participation. I mean, even if the markets float up, you're not seeing institutional buying. Now, you might get some 401k money flowing in, IRA money every month or every quarter or something like that, and just individual investors inching into the market, getting coaxed in by the talking heads on TV. But that's really about it. I mean, when you're only doing, 65, 75, 85 million on the SPY, when the average volume for the previous 12 months was probably 130, 140, 150, I mean, you're definitely talking about 50% of the average volume. And granted, I mean, it's August. I think we all understand that. A lot of traders have taken off this last few weeks and probably the next couple weeks until the kids go back to school in early September and so forth. So I think that's part of it. I also think there's just a wait-and-see attitude in the market. All right, we want to know, is the ECB going to be buying bonds? Or is the Federal Reserve going to be doing QE3? And we don't really have any firm commitment. They've said they will if we need to. The ECB has said that they want to do a bond buying program, but you don't have anything in stone yet, and I think that's the problem. So in the meantime, while the markets are hoping and dreaming, they just continue to kind of float up on very, very light volume. And coming into this week, I mean, that's really where we stand still. You don't have any firm announcements of anything definitive yet, and the markets, therefore, unless we get some sort of catalyst, most likely will remain quiet. Now, at some point, there will be a catalyst. It'll either be a bullish or bearish catalyst, and you'll see the volume rush back in. You'll see a panic of investors and traders and institutional investors either buying or selling the market. Based on the charts, it technically should be a sell, but again, you never know if they'll spike it up quickly before they drop it back down. And again, if we go back to the daily chart on the SPY, you have a major level right here. You're into the double top 52-week high. Now, I do have a couple other levels on the spiders that I want to discuss, but I'll be honest, I'm not going to release them here. I have the next master level above here, which is not very far above, but the next master level above here, and I will release that to my members in the No Hype Live broadcast Sunday night. All right, Sunday nights and Wednesday evenings, we do No Hype Live broadcasts where we show our charts, we answer questions. This is all part of your Research Center membership. If you're a Research Center member, you get swing trade alerts, these live broadcasts. You get every day, you get a video with master calls and master signals in it. You get proprietary secret analysis. All this kind of stuff is involved in these videos in the Research Center. And again, you can take a free trial to it, 7-day free trial. So I encourage you all to just check it out. Come to InTheMoneyStocks.com and take that free trial. If you're a day trader and you want hardcore chat room analysis and ask questions and live video and so forth, then the intraday stock chat is for you. But in any case, going back to the markets again, you're at a key resistance here. What I'll be watching in the beginning of this week, Monday, Tuesday, is whether or not we break through this. Do we confirm above this level, or do we falter and pull back and no confirmation occurs? Confirmation is a proprietary signal at InTheMoneyStocks.com. All right, let's go to a couple other charts out there. What's in action? What do we want to watch this week? I think we want to see Apple. I think we want to take a look at Apple because Apple busted through a good day on Friday. And this is kind of interesting because Apple had a very good day on Friday, but the markets really didn't have that great a day. I mean, it was really a flattish type day. S&P up a couple points, Dow up 25 points, NASDAQ was up almost 0.5%, which is mostly Apple here, of course. But you did pierce the double top, and this is something important. Here was your previous 52-week all-time high on Apple, and you did close above that. The only issue that I have with this is if you're going to break a double top and you're going to continue up on any stock or any market, you really want to see volume behind it. And this is something we're lacking on Apple. This is something we're lacking on the S&P 500, and that has to be a little bit of a concern to any intelligent investor. If you're not intelligent, then maybe it's not a concern. But if you are intelligent, you have to look at that and say, hey, listen, if no one's participating here, if you're not getting institutional involvement, what's going on here? All right, so nonetheless, you did break the high. A lot of amateurs would think that's a breakout. It's actually not a breakout. You need confirmation. But nonetheless, we'll be watching on Monday and Tuesday to see if we get confirmation. And we want to see, again, if that volume is going to step back in the market. Google was up about $4.27 on Friday. The interesting thing about Google is you have taken out this little pivot high right here, but the question is, are you going to the next high? And that's going to be the next question here, guys, is if you continue up on Google, there's a major level right here at the 719, 720 level, and then another major double top all-time high around the 745, 750 level. And those are the ones I'm going to be paying attention to if this stock continues to go up. Now, it's really extended at this point. If you look at the chart here, I mean, from this low going back to mid-July, we're basically 1 month into this up move, and you've gone from 560 to 677. That's over a 100-point gain in Google in just 1 month, and that's sizable. That is very, very sizable. All right, so those are two key tech stocks that we want to pay attention to. Another factor that I think warrants us keeping an eye on this week has to be the financials. And let's talk a little bit about the financials. Why are the financials a little bit of a concern? Well, if you go back to the rally on Thursday we had, and then we kind of had that pause day, small update on Friday, and you look at JP Morgan Chase, you're not getting financial development or kind of movement in them as well. And if the financials aren't participating, we have to start to wonder what's going on with this market. The financials have been a great indicator, really ever since the financial crisis started in 2007, 2008, well, really more 2008, but it all began in 2007, the collapse. You have to say to yourself, because the financials have been key, whether their investments are in exposure to Europe or even in the U.S., they've been a great indicator. And it makes sense. I mean, they're the financials. They have investments. They lead. They take control of everything. I mean, they're the key to everything that's gone on over the past 5 years or so. So, my one issue here with the financials, if you look at JPM on Thursday right here, it basically was flat. And Friday was flat to slightly down. And why isn't JPM participating here? What's going on there? And what we want to watch early in the week here is whether or not JPM starts to participate, maybe even leads. Then it's all right. Then you can say to yourself, all right, JPM's regaining what it should have had on Thursday and Friday. If you still see this lagging early this week, it is a dead-on signal to be extra conservative and possibly even accumulate some more shorts. All right, use JPM as your leading indicator for this market, folks. It is a great leading indicator. It has been a great leading indicator for some time, going back years, actually. All right, so again, keep an eye on that. Now, technically speaking, you have a little bit of a bullish pattern here above the 200 with the 20 sloping up. So, I mean, the chart itself doesn't look bad, but the fact that it wasn't participating is something that does get my attention. All right, the other factor I want us to keep an eye on this week is the VXX. Now, the VXX is the tracking ETF for the VIX, and obviously that's the fear index. And this is the last thing I want to speak on today, but I think it's a very important indicator. So what I'm noticing here on the VIX as well is that you haven't made a new 52-week low on the VXX. Basically, you hit double bottom, right? And the difference here is that you're only back to the lows on the VXX, but what you have to see on the spiders, when you compare the spiders, they've been hitting new highs. Right, again, we actually made an intraday new 52-week high on Friday. So the fact that the VIX isn't making new 52-week lows is something of a concern to any bull out there, or at least it should be. And again, you want to keep a very close eye on this market and kind of watch how that VXX plays out early in the week. So again, we're watching volume. Volume is very important. As we make new highs on no volume, that has to be a concern. If we see volume come back and the market still goes up, then that would be a positive. We want to watch the obvious signals from stocks like Apple, was they're making new 52-week all-time highs on less volume. We want to see, can they confirm? We also want to watch the financials. Financials obviously did not lead the market. They actually lagged late last week. And we also want to watch the VIX. All right, the VIX will be a good indicator as well. So these are the factors I want you going into this week watching. And that should give us a good instance. You should really, by Monday, Tuesday, you should know. All right, if you continue to see kind of weakness in these names, you know, VIX or the strength in the VIX really versus the market still going higher or floating higher on no volume, that should be a dead-on indicator. If you see the JPM weak and the market continue to be neutral to positive, that should be an indicator as well. These are all indicators we must watch. All right, guys. Bottom line is I'm going to be doing the No Hype Live Sunday night. Nick will be doing it Wednesday. That's part of the Research Center. You want daily videos, then Research Center's for you. If you want swing trade alerts, the Research Center's for you. That's what it's all about. If you're a swing trader and investor, the Research Center is for you. Come to InTheMoneyStocks.com, take the 7-day free trial, and start profiting with the pros. Take care, guys.